Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today, I'm going to be on computer today because we're going to be looking at stocks, the different stocks for 2022, because 2022 is fast approaching. We only have a couple of days left until the new year. And what I wanted to do today, as you can see from the title, make sure you spam the like. We didn't even get into the video yet, but make sure you spam the like that button. It really helps the video out. That's the first thing we need to do. But today I want to talk about the stocks that are in play, some stocks that you need to take advantage of looking forward into 2022. And for this video, I want you to sit down and think about the concept. Maybe there's not a stock on this list that you particularly like. Hopefully there is, but hopefully you get the concept of what I'm buying, and you can even find your own stocks through this list that I'm going to give you and why I'm picking these different names for 2022 and onward. So the first thing I want to get into for the stocks that I'm looking at is a lot of talks have been going on about inflation. Inflation is at a 30-year high. We haven't had inflation this high since the 70s, 80s. So inflation is a big topic of today and is on everybody's list of, oh my gosh, what's going on with this? So when thinking about inflation in 2022, am I thinking it's going to get better or am I thinking it's going to get worse? I believe it's going to get worse. So what I'm thinking of is what type of plays I can get into that I would be able to hedge against inflation. Well, these companies are selling products that will increase as the inflation gets worse, i.e., as we're looking at the name here, Target. Target, as you know, sells general goods that the everyday buyer is going to need and use. So whether you have $10 in your pocket, $200 in your pocket, $2,000 in your pocket, you all have to eat. Everybody has to eat, and Target is going to supply those goods for you to eat. Same thing with Walmart. Walmart is also a potential play. I was looking at the reason why I'm choosing Target over Walmart is because Walmart has been sitting in this weird channel lately, as you can see here. I talked about it in my last video, how it's just sitting in a channel. It's been doing that for over a year now. For some reason, it's not able to get above 150 and it's not able to get below 137. So for me, I'm looking at Target. One, it has a really good buy point right here, right? The support level right here of 219. That's one reason why I'm looking at Target. Two, I'm looking at Target because of the inflation play for the year of 2022. This thing has had great growth over the past year. As you can see, it's had over 100 and I'm getting it from the wrong spot. But it's had a good, 60% growth over the year, which is crazy. Like, that's really good what you want to see from a stock over the year. And on top of that, just look at Target, how it is here. So this is something you could even purchase today if you were looking to get into a play. So you have everything lining up for Target. It has great growth over the past couple years. It's a potential play for inflation. If inflation were to rise, the stock would continue to rise as they increase the price of goods. And it's at a good buy point, as you can see right here. So I really like Target for that reason. These next couple stocks we're going to look at is also the same thing. I'm going to be looking at inflation as a reason to get into these plays. So the next one we want to look at is type that in, American Express. I like American Express. One, they pay dividends. You can't go wrong with dividends, especially in a scenario like this. And they constantly increase their dividends. So that's something I like to see on stocks. They're paying dividends. They're consistent with their dividends. They're not just, oh, I want to pay dividends one month and then the next month, like, we're not really feeling the dividends. They're very consistent with their dividends, and they also have great growth. And with me, I think it's really good to get into banks, especially now in the scenario we're in. As you can see, back in 2008, banks are not going to fail. Like, I think banks are a great play, especially if, one, we're in the scenario like we are in today, where there's a lot of debt in the world right now. And on top of that, it has great growth, great earnings, and you also have dividends. So this is going to be a potential inflation play. Over the past year, it's done about 44% from the bottom to the peak. Generally, let's get it exactly from exactly from the bottom, exactly from the top. So it's had 59% growth from bottom to peak over the year, which is pretty good, similar to Target. And American Express is one of those solid companies that it's just not going anywhere. It has a lot of cash on hand. It's ready for inflation if it does ramp up. And it's just one of those perfect plays. Again, it's at a great buy point if you do want to buy it here. On a technical standpoint, it has a support level around 156-ish, dipping down a little lower than that as well. But in general, you can see how, let me draw that out for y'all so y'all can see exactly what I'm talking about. So right there at 160 has that support level, and then it also has this lower support level of 150. So it has some great buy points that you can buy this at right now if you were looking to get into this play. Pays good dividends, and I do see a lot of potential upside for this play over the next year. Last one, I do want to talk about this one here. And this one is DTLR, which is DLTR, excuse me, which is Dollar Tree. Right now, this is out of the three that we're looking at, the Target, the American Express, and DLTR. This is the one that is number 3 on my list. I'm least likely to get into this one, but I do want to put it on the watch list just because I like what it is. I like Dollar Tree. It's one of those companies that is starting to raise prices, which can only be good for investors because this is one of these inflation plays that as prices go up, Dollar Tree is going to continue to raise their prices and do what they have to do to continue to make money. Right now, what I didn't like is the technical aspect of this one. It is a little high. It is a little oversold right now. So if you want to sit down and wait for this one, which if you're looking at 2022, you just throw this on the watch and then be patient with it. If this thing can get down to 120, maybe if it can get, hey, even lower, maybe 110, I think that would be a great buy point. I just think it's a little oversold at this moment. But from a long-term standpoint, I really like this one for the inflation play, for them paying consistent dividends, and for the long-term growth for this company. I don't think this company is going anywhere. They don't care if they have to turn this into the $2 tree. This company is going to sit around for a long time and do what they have to do to make money. So that is my inflation play, the stocks for my inflation play. I want to interact with y'all. Leave comments down below if you do have some inflation plays as well that I may have missed, and maybe I can do another video explaining those. But that's my inflation play ideas, concepts for inflation for next year going into it. I think those are some great stocks to look at for that. So next, what I'm also seeing for 2022, and put it down in the comments if you agree or disagree, I'm also seeing that Build Back Better plan come into fruition. I know a lot of people in Congress are debating it. They're like, I don't know if it's going to do. I don't know if it's going to happen. Is it going to happen? What form is going to happen? But I think whatever happens in 2022, there's going to be an election in 2022. So people are going to be on edge to make sure something gets done. Y'all been in office for 2 years now. The people are going to expect something to get done. So whether that's half of a bill, a quarter of a bill, just some words on a document, whatever, something is going to happen with a Build Back Better plan or some type of plan that sounds like it. So with that, you want to get into companies that have basic materials, companies that have things that are going to be very important to infrastructure and building items like that. And that's where we get into this company here, MLM. I like this one. One, it has a lot of cash on hand. That's what you really want to look for when you're looking for these companies. And I have a couple on the list that have sitting on a lot of cash as well. But this one as well has a lot of cash on hand. And on top of that, it has a lot of growth potential. This thing over the past couple years has grown crazy. If you bought this in the pandemic, you're up 200% right now. That is absolutely insane. And the CEOs, I do also, when I'm looking at these companies, I like to see what the CEOs are saying. What type of growth potential do they have in this company? And they are continuing to say this company is looking to grow more. This company is looking to do this in the next 5 years. So potential-wise, earnings on this look great. I like what they're doing within the company. It's nice and strong. They're not handling it with a lot of debt. So the potential growth on this company, I'm expecting the same that it had this year, with another 30–40% growth. And that's great to get in a company like that. On top of that, you have the Build Back Better plan or whatever comes of that behind you, pushing this up even more. A lot of people are going to be looking at companies like these to take advantage of them and even make a little bit more money on them as well. And the last one for the Build Back Better is this one right here, LIN. I like this one. One, they just started paying dividends, which is great. With companies like this, I get a little sketched out when they just started paying dividends, but the fact that they are paying dividends means, one, it can support that. So that means this company is making a lot of money. But we do have to see for the long term if they continue to pay dividends. But I do think they will, because it's a great company. It's a lot of growth in this company. And I think they have a big potential for 2022 LIN. And just look at the chart. The chart looks great. It's had 100% returns over the past 2 years since we got hit with the pandemic in 2019. So I really think this is a great play to get behind the Build Back Better plan, to get some growth in your portfolio, and to have something with some materials that are essential to this plan here. All right. So the next one we want to look at, this one is a staple. I think absolutely everyone should have this in your portfolio. Man, I shouldn't have put it on there, but y'all saw. Everyone should have this stock in their portfolio. This is Apple. Apple every year kills it. They dominate. It's the biggest company in the world on the stock market. It's crazy. They have dividends they pay. Great. They have a ton of cash on hand. Amazing. And they grow like crazy every single year. Apple is one of those stocks that it has a cult around it. People that love the iPhone, they make sure they buy the iPhone. They got the little ear pods. They got the Macs. They got to get the T-shirts. They got to get everything. They got to get Apple everything. They eat, breathe, and sleep Apple. So this company is just going to be a staple to throw in your portfolio every year. It's going to kill it for you. It's the leader of the SPY. So just buy this stock. And the reason why, on top of that, I like this stock, other than it just being Apple, is because for this concept, I want to sit on companies that have a lot of cash and have a lot of potential for the future. And Apple is one of those things. And the reason why I want something that's going to sit in cash, has a lot of cash on hand, and has potential for the future is because looking at the way the Fed is playing the markets now, they're talking about tightening monetary policy. They're talking about increasing the interest rates, whether that be a half a point, a quarter point, they're saying around March, they plan to do that. So when you are seeing the Fed is going to increase interest rates, tighten monetary policy, you want to get into something that has a lot of cash on hand and they have a lot of flexibility to move in the market. When you're dealing with a company that has a lot of debt, and the Fed begins to increase interest rates, that becomes an issue for that company. Because let's say you have a credit card. You have a credit card and you max the credit card out. It has $10,000 that you just maxed out. And the interest rate on that credit card is 0%. All of a sudden, 6 months later, you have the card and your credit card company says, oh, we're going to move the interest rate to 6%. Now you have to pay interest on this card, 6%. That's going to take into your monthly expenses. You're going to be paying more monthly to manage this credit card. And the same thing happens with stock companies in the stock market. So with me, I want to make sure that I'm in companies that have a low amount of debt. They have a lot of cash on hand. So if anything were to go wrong, they're still going to be okay. And Apple is one of those companies for 2022 that is very strong. It kills it every year. And it can weather the storm with whatever the Fed throws at it coming next year, 2022. So I really like Apple for that reason. On top of that, another company that I like as well is Facebook. I like Facebook. A lot of people are saying, well, not a lot of people, but some people are saying, oh, this company is going down. A lot of other social media platforms are going to take this thing over. It's turned into the next MySpace. I don't believe so. Facebook has been able to pivot and move in the market especially with this new metaverse that they're doing now. I think the aspect of that is just beautiful. I think it's a great idea to really pivot so they're not focused just on social media aspect. They have something to look into the future with. On top of that, staying with Apple, they can weather the storm whatever 2022 throws at it. Facebook has a lot of cash on hand, and if anything were to happen with the interest rates, which I believe it will, the feds, well, this is what they're saying. Whatever, if they lie to us, then they lie. You can come back to this video and say, oh, the Fed lied to us. But from what they're saying, they are going to move interest rates up. So we do need to prepare to make sure these companies that we're buying in 2022 are flexible and able to weather the storm through the increase in interest rates. Me personally, this is just my personal opinion. I don't think the Fed is going to get very high in increasing interest rates. Maybe we get a couple quarter points. Maybe we get up to 1%. And then I think they backtrack. And then we might come back down end of 2022, 2023. But we'll see how it plays out. That's just what I'm thinking. But we got to play it by what the Fed is saying and have a company that is loose and flexible for whatever they may do. So with that, Facebook is a great option. They do great increases every year. Let's look what they did this year. From low to high, they did 46%, which is great. It's a great buying opportunity right now. It's sitting in a little consolidation level where it did a nice little double bottom right here around the 309 level. And it looks like it's on its way to push forward. So this is a great buying opportunity from a technical level, which is great. So that's why I personally love Facebook and Apple, because these companies can weather the storm and they've been around for a long time. So they're definitely going to hold their gains and continue to move higher. So I love that. Last but not least, well, actually, I have a couple more. But these last couple are more hedges and just companies that everybody should own. I don't care if it's 2022, 2023, 2024. You need to be in these plays all the time. The first one is the SPY. The SPY is the overall market. If you haven't heard of it, is the S&P 500. You need to be in this like every time, every year. Everybody that picks plays in the stock market, whether you're picking companies, whatever you're doing, flipping stocks, blah, 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 you need to be in the SPY. About 50% of people that trade stocks don't do as well as the SPY. The reason why is because this is the top 500 companies in the stock market. Whatever gains you get, you're going to have, and these are going to be taken out of the top 500 companies. So you need to be in this every single year. It's point blank period. I don't care what the feds are saying or what the president's saying. You need to get in this. This has offered me some great returns on the year. I think this thing did, how much did this thing do this year? I think it did like 30% this year. I don't know exactly offhand, but it's done pretty good. Let me get the actual number for y'all so we can get like a general. I think it's like 30%, about 30% this year. Like you can't be mad about that. 30%, like that's great. That's doing better than a lot of stocks that are out there on the market now. So make sure you get in the SPY. That should have been the first thing I said in this video. 2022, buy the SPY. 2023, buy the SPY. 2024, buy the SPY. It's just a great place to be. You're going to make money in it long term. And the last thing I want to look at here, this is one of those plays that I don't think a lot of people are paying attention to. And the reason why I like this one, this is gold, G-O-D, G-O-L-D, Barrick Gold. And this one got killed in 2021. It went up, it failed, and it's just been dipping down, dropping and everything. It didn't do hot in 2021. The reason why I think this thing is going to do a lot better is because of the things I said previously, why I'm picking the stocks that I just had out. I explained to you throughout this video. One, we have a lot of inflation. Inflation is going crazy. Gold does well in a environment of inflation. Two, we have the Build Back Better plan. That's going to add a lot of materials are going to be needed for the Build Back Better plan. On top of that, there's going to be more debt added to the Build Back Better plan. Three, interest rates are rising, and 4, you just need a hedge. I think having some type of hedge, which is gold, gold, silver, stuff like that. A lot of people say crypto is not a hedge, it's a risk asset. Something that something that goes up 100% and then drops 50% is not a safe haven, is not a hedge. A hedge is something that doesn't really move a lot, but it protects your money. That's a hedge. That's a definition of a hedge. So all you crypto guys that are watching this video, crypto, before you say crypto, type in the comment section, crypto's a hedge. I got a hedge. I'm hedging against inflation with crypto. Crypto is not a hedge. If you can't sleep at night without feeling comfortable that crypto or your investment is going to go down 10-20% overnight, it's not a hedge. Hedges don't move that much. They just stay pretty generally flat, but they go up a little bit based on inflation. That's all. So anyway, that was my quick rant. But for this one, I'm liking GLD. If you look at the chart here, this is the overall gold, the overall price of gold, how gold is fluctuating. This one looks really nice, and it hasn't broken out yet. I don't know why it hasn't broken out, but it's building a great base right here. It's not getting below these levels here. It's holding very well at these levels. And we did see a high up here at the 194.45 that it took out, and then it just kind of phased out a little bit. And even if you look at a lot of charts, how they move, the fact that it hasn't lost its gains is very good. So I'm predicting that this thing is going to move a lot higher come 2022. One, with all the fundamental things I was explaining through this video, and 2, just how the fundamental chart looks. And you can buy this one. You can buy GLD to get into this overall play here. Or what I like to do is buy type the wrong thing in, GLD. I like to buy some of these gold mining stocks because they're the ones that have these gold and have the gold on hand, and they're going to be a lot more volatile than just the buying of the gold trust. So when the gold trust moves maybe like a 0.5% or 1%, 2%, whatever, these gold companies are going to be moving 5%, 10%. So they're going to increase the volatility of your plays. They're going to increase the amount of money and capital that you have. But there's a downside to this, like in 2021, this didn't do that well, but I really think 2022, this thing is going to be a great play. So we will see how these all play out. I'm really excited to see how all these companies play out. But let me know down in the comment section, do you agree with my mindset, what I'm thinking about with these companies, why I'm getting to these companies, what I'm thinking that's going to happen with these companies in the future? Let me know down in the comment section down below, and also put a list down below what type of companies you're getting into for 2022, and also write down like why you're getting into them, blah blah blah. If you hate my reasoning for these companies, let me know in the comments. All that, just let me know in the comments. We can have a cool conversation. But that's gonna wrap it up. Make sure you spam a like on this video, sub down below for more content like that. This is gonna wrap it up. As being your boy, Blessed Applesauce. Stay blessed, and I'm gonna see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.